AMD has crashed nearly 6% after reporting its earnings yesterday. Is now a great opportunity to buy this incredible company. We're going to take a look at the historical performance of Advanced Micro Devices. We'll look at their revenues, their top line growth, as well as their bottom line net income year on year. We'll also have a quick look at the health of this company, their total cash versus their total debt, and we'll see how well they've performed versus some of their competitors in this industry over the last 5 years. We'll touch upon some of their metrics, whether or not they are satisfying our demands for this climate, for this industry. We'll also take a look to see what institutions have done over the last year, whether they've been buying or selling. And we'll discuss a significant amount of insider selling that has gone on and talk about whether or not this is a bearish signal. And more importantly, we'll come to understand why exactly has the share price been falling of this company, which has performed extremely well over the last few years. And as always, we will run them through the valuation model, getting to the intrinsic value as well as the acceptable buy price, given our investor margin of safety. And we'll take a look and see what Wall Street are forecasting for the price over the next 12 months. So let's jump straight into their earnings, understand what went wrong. Now the headline reads, AMD shares fall as the first quarter forecast comes into light. So it looks like potential guidance not meeting or satisfying that quench of Wall Street analysts. So let's look at their top line. So earnings per share, 77 cents. What were Wall Street expecting? Well, the same. So pretty much on target. Revenue 6.17 billion, so in actual fact they did beat Wall Street by around 50 million. So why exactly did we see these stocks slide more than 6% yesterday and also still 6% down in the pre-market? So we can see here for the first quarter Q1 of 2024, AMD are expecting 5.4 billion of sales. Now, we can see analysts were looking at 5.73 billion, so this is down by around 330 million for their expectation. And the CEO essentially said for 2024, they expect the demand environment to be mixed. So one thing that is important during these earnings or earnings seasons, not just to look at the top line, bottom line. Yes, earnings per share did meet. Yes, the revenue did beat. But if these companies are producing mixed signals or their guidance is lowered over the next year, then this will really impact the company and their share price. So do bear in mind, also try to understand their forward guidance. As we saw for AMD, it is looking to be 300 million lower than what Wall Street were hoping for. In terms of the last year, well, they are up 137% over the last 10 years, up an incredible 4,859%. Absolutely incredible. One of the best companies for share price return that we've analyzed on the channel. And yes, when the market opens, it will be towards the mid to lower, or in fact mid to upper end of the 52-week range. And that forward PE will come down to around 40. So let's take a look. Is this very high forward PE in fact justified? Well, top line typically 3 to 7%, although this is a fast growing company. 6.5 billion reported on the top line, 23.6 billion in 2022. So that is some phenomenal growth, more than 3 times, just under 4 times over the last 5 years. And we see an increase every single year, which is positive to note, although we do expect that 2023 financial report to show a little bit of a drop from the prior year. Overall, though, very strong. They have been growing at a fast rate. We will look at the last 10 years percentage-wise too. 337 million reported in net income in 2018. 1.3 billion in December 22. So again, some very strong growth on the bottom line, around 4 times in fact over the period. We do note a small increase to 2019 before a very sharp rise both in 2020 and 2021 before falling again in 22 and expected 23. So yes, they have been growing at a very fast rate, both on the top line and bottom line, but it's important to understand the inconsistencies and to note that 2024, they do expect a mixed environment, so don't expect some very strong growth that we have seen in the prior years. Quick health check, well, total cash and short-term investments, 1.2 billion to 5.8, so they're holding quite a lot of cash in comparison to 5 years ago. In terms of that total debt, what we can see here with the total debt, it has gone from 1.2 billion to 2.9. So in actual fact, they hold a lot more cash than they do total debt. That is a good sign of the company, and we'll see that when we look at the net debt to EBITDA metric. Very quickly then, in the semiconductor industry, we have Intel, we have Qualcomm, Texas Instruments Incorporated. And what we can see over the last year, AMD has been the best performing, absolutely blown the other companies out of the water. When we extend that to the last 5 years, again, a very similar story. You would be one happy bunny if you had picked this company up 5 years ago. Absolutely incredible growth. But we can see here you would have had to weather that storm. It did rise very high in 2021 before falling all the way down to 2022 and then picking back up. Do let me know if this is one you have had a very long time and hold a very strong conviction for, as that is very impressive. Institutional ownership, well, 68%. 12.9 billion worth of sales over the last 12 months. A lot more buying by these institutions over the same period. We can see institutions do love this company. Q2, they bought heavily in comparison to how much they sold. Q3, we do note more selling than buying. But as we can see in the latest quarter, institutions are buying a ton of AMD. So let's take a look now at the insider trading. Now, I did mention a lot of insider selling. We can see here a significant amount. In fact, just the chair, president, and CEO has sold many times. In fact, just under $20 million. Now, the interesting thing here that I do want to point out, and this is one of the reasons why we say insider selling isn't a bearish signal. They sell for many reasons, personal, financial, and the way I want to show you this is just look at all 4 trades that happened in November and December of last year. The share price now are up significantly from that point, 40%, 50%. If the CEO had held on to those shares, she would have made another 8 million. Absolutely incredible when you think of it like that. So let's take a look at essentially the financial metrics. Now, as always, I do prefer to focus on free cash flow. Earnings data is susceptible to manipulation by management through accounting. Now, there was a significant period where they were in fact returning negative free cash flow. That did change in 2019. Now, just something to consider, it did go up very strongly in 2021. That's where we saw the share price get to the peak before falling down. 2023 at 69 cents is a bit of a shame. I would have liked to see this much higher. In fact, it has come down in both years before. 2024, they are expecting a very high 332. Now, it is a bit questionable given what the CEO has said about the environment, but if they do return this, then you could argue maybe with the growth, it is justifiable a very high forward PE. And that is shown here. They have had some very strong growth, double digit in fact for the majority of the last 10 years. 2020 to 2022, we are seeing some very strong growth. As we mentioned, 2023, a drop of 4%. Now, with a company that is fast growing, you would expect this just to be a one-off with the negative growth. It would be very shocking and harmful to the share price if we don't see some double-digit growth in 2024. In terms of total sales then, we did run through this before, but if we stretch back to 2014, their top line has increased 4 times over the last 10 years. Shares outstanding, well, they don't do share buybacks, unfortunately. Over the period they've issued shares, they've diluted your position. It has gone from 0.768 billion to 1.63, something just to be aware of if you didn't know, if you were looking to be an investor. ROIC, now for me, this has to be 10% or more. Probably one of the reasons why I wouldn't be happy to invest, as well as another reason we will touch upon shortly. But over the last 2 years, 2%, 1%, essentially, this shows us how efficient management are at allocating that capital. The last 2 years hasn't been great. Granted, the 4 years before has been, but there has had some questionable periods throughout the company. In terms of the operating margin, well, very thin in 2023 at 2%, very thin in the prior year as well. So again, it doesn't fill me up with massive confidence. Free cash flow margin, again, it has started to lower down from 2021. If I was to personally invest in this company, I would need to see consistent margins and a very nice ROIC figure at a minimum 10%. Net debt to earnings before interest, tax, depreciation, amortization, as we mentioned earlier, this shows that it wouldn't even take management 1 day to pay all of that debt net of cash on hand. So let's jump in to the valuation and find out whether or not this is undervalued. As always, if you enjoy the content, values being provided, smash that like button, hit the subscribe and bell button so you are continually notified of these videos as they drop. Now, one thing to note, it is interesting. Now, Graham's valuation, it isn't applicable. They are a fast-growing company, double-digit increases to the top line for the majority of the period. But one thing I want to pull out from here, their trailing 12 months earnings per share is 0.1, which does essentially make the next model irrelevant because given it is so low, it is going to show a ludicrous figure here. So we won't hold that for now or use this model. So the model that we will use, again, dividend discount model isn't one that we're going to look at given the fact they don't pay a dividend, will be that DCF, dividend discounted cash flow model. Now, what this is, we have the free cash flows year on year. The average growth rate, we do see it negative. Now, what I want to point out in terms of the growth rate, we have used a fairly optimistic 20% with the discount rate. So this gives the present value of future free cash flows and terminal value. When we add that with the cash, subtract total debt, and get to the equity value and divide by shares outstanding, we get an intrinsic value of $127, which is what we believe to be the value right now for AMD. Now, that is a sign of overvaluation. So what I really wanted to get my point across, if you believe that the growth rate of AMD is going to be lower than 20%, then this shows that this is even overvalued at $127. If you believe the growth rate is in fact a lot higher, somewhere around 35%, you can see that it is undervalued. It really depends what you believe in. Personally, I see this 20% even as optimistic, and we will touch upon this now. But essentially, the intrinsic value for AMD in today's episode is just the DCF model. We did explain why. And what I would say is it does look to be overvalued when you do bear in mind all the metrics we ran through and the information. I do see this as essentially the top of the level. Now, it could run. It doesn't mean it won't. It's just my point of view that this is completely overvalued by the market, and time will bring this up to date with the share price value. So we can see margin of safety there is absolutely none. What do Wall Street forecast over the next 12 months? While they see 4% upside, they still do believe there is some dollars for this share price to accumulate, but very, very minimal, around $6. Let me know your thoughts in the comments below. I know a lot of people do love AMD, but do you believe this one has just run too far and is not worth the current share price? Or do you believe maybe there is value, there's something that maybe I'm missing, maybe something that the market is missing and it should be running even further? Don't forget, it did have an incredible run, over 100% in the last year, and a phenomenal run over the last 10 years. Don't forget, if you do want to grab a copy of the valuation model to get to the intrinsic value and acceptable buy price of companies in your own portfolio or on your watch list, you can click on the pinned comment below to grab a copy. As always, have a great day. Smash the like button if you enjoyed this episode. I'll see you on the next one, and take care for now.